Hello viewers. Today let's understand the most commonly asked questions by our NRI community. And these questions are: who is an NRI? Do you need to file income tax return? Are you allowed to keep your resident bank account once you turn out to be an NRI? We will also understand a little bit of taxation on NRE, NRO and FCNR accounts. Hi, this is Prabhanjan Rao from Elysian Investment Advisory. We are a SEBI registered investment advisory providing curated solutions for wealth creation. I am also a co-founder of CFO Optimus, which is a CFO outsourcing company. We are present in UAE and in India. I am also a chartered accountant and a cost and management accountant, having 21 years of post-qualification experience across Africa, UAE and India. Who is an NRI? NRI means non-resident in India. There are three acts associated with it: the Income Tax Act, the FEMA Act and the Aadhaar Act. In this video, let's restrict our conversation with respect to Income Tax Act. An NRI means non-resident in India and not non-resident Indian. It could be person of Indian origin or a foreign national or a PIO or OCI holders. There is no direct definition of a non-resident as per the Income Tax Act. If the conditions of residence are not satisfied, then he becomes an NRI. At this juncture, it is also important to understand who is an NRI under the FEMA laws. NRI is defined under FEMA as a person who is resident outside India, who is either a citizen of India or a person of Indian origin. So if you are checking your residential status from the taxation perspective, you need to check the definition of NRI as per the Income Tax Act. The definition of resident under the Income Tax Act is a bit tricky one. It has got two main exceptions for the main section. I have simplified for the sake of viewers and can act as a checklist. This residential status depends on some important factors. Some of these factors are very important to determine which category you belong. Every category has got its own conditions to determine your residential status, that is whether you are a resident or a non-resident. Let's understand what are all these factors are. The first factor is the purpose of your visit to India or going outside India. Second factor, your nationality, that is, are you an Indian or a foreign national or a PIO holder. The third factor is your income levels, whether is your income less than or equal to 15 lakhs or your income is more than 15 lakhs. The fourth factor is your residency outside India. Once you identify these factors, you need to determine which category you belong. There are 6 such categories which has got conditions to be fulfilled alongside. Let me explain you the very first category. And the conditions are: you must be an Indian, and the purpose is to leave India for employment or a member of crew of an Indian ship, and must be in India or stays in India for a period of 182 days or more. Here, employment means self-employment. And please note that all those non-residents who come to India for a visit do not fall under this category. This is for people who leaves India for the purpose of employment for the first time. Let's understand the second and third category together. Here, the income levels are the deciding factor. So let's get into the details. The conditions to be satisfied under the second category are: you must be an Indian or PIO. Your Indian income should be equal to or less than 15 lakhs. You being outside India and comes to India for a purpose of visit. You stay in India for a period of 182 days or more in the previous year. And now let's understand the third category. You must be an Indian or PIO and your income level here is more than 15 lakhs. And you being outside India and comes to India for a purpose of visit, you stay in India for a period of 120 days or more in the previous year, and he stays in India for 365 days or more in the preceding 4 previous years. So under second category and third category, the common factor is your income. If your income is less than 15 lakhs, then you fall under category number 2. If your income is more than 15 lakhs, you fall under category number 3. So let's discuss fourth and fifth category combined. Here, the deciding factor is the number of days stay in India. So let's get into the details. So the conditions under the fourth category are: if you are an Indian or a PIO or a foreign national and should not fall in any of the category number 1 to 3, and your stay in India is 182 days or more in the previous year. Now let's get into the conditions for the fifth category. You are an Indian or a PIO or a foreign national and you should not fall under category of 1 to 4, and your stay in India is 60 days or more in the previous year, and your stay in India is 365 days or more in the preceding 4 previous years. Now let's discuss the sixth category, which is called a deemed resident, and this is applicable only to Indians. So the conditions are: Indian income is more than 15 lakhs per annum and you are not a resident in any other country outside India. Here, please note that this is applicable only to those Indians who are not residents in any other country but travels across the world for their business. Though they stay outside India for more than 182 days, they are considered to be deemed resident. I hope I have clarified your first question: who is an NRI and how to determine your residential status. Isn't it complicated? We chartered accountants always like to live a complicated life. Jokes apart, I'll be traveling to Ghana and Kenya, and those who wants to meet me and get your doubts clarified can mention in the comment section. I would be more than happy to meet you and get your doubts clarified. So let's get on to the second most commonly asked questions. Do NRIs need to file income tax return? Before we straight away say yes or no, let's understand the provisions relating to it. NRIs have to pay tax on income earned in India. They have to pay tax on income that accrues or arises in India. They also need to pay tax on income which is deemed to accrue or arise in India. Monies received or deemed to be received in India is also taxable. Let's get on to the third question. Are you allowed to keep resident bank accounts? Under the FEMA laws, once your status is changed to non-resident, you are not allowed to keep any resident bank accounts. The onus is on the individual to intimate the relevant banker and convert your resident account into a non-resident account. There are two types of non-resident accounts. One is the NRO account and NRE account. Any receipts or any income from the NRE account is completely exempt from tax. And another receipt where you can keep your money is FCNR account, which is foreign currency non-convertible account. This will protect your receipts under any exchange fluctuation. In my next video, I will address some of the questions asked by the NRI community, such as: can NRI invest in India? Can NRI borrow or lend money from friends or any other persons? Can NRIs invest in mobile properties? Can NRI invest in immobile properties in India? And many more questions we will address in our next video. Till then, this is Prabhanjan Rao signing off from Elysian Investment Advisory. Have an Elysian day.